I promise that after this video, you will know everything about order blocks and that you will be better than your competition. Now, in order to achieve that, we are going to go over 4 steps. The first step is bias. Second step is what is an order block. Third step, relativity theory. And the fourth step that I've not gone over before on this YouTube is the retracement. All right, again, first step, bias. What is the bias again? Bias is the direction of the market, also known as overall the drawn liquidity. So which PD array are we aiming for? If we look at this market right here, GBP US dollar on the weekly time frame, we see we're coming back into this weekly order block that we see right there. I'll explain later on why it is indeed an order block. After that, we see that we can reach for this previous week low right there, which is a discount array. Overall, we can also see that we have been going lower and we have been respecting those bearish fair value gaps right there. So we could assume right here that we might want to continue lower. Now, to get a more clear picture, let's dive into the daily. So on the daily right here, we can see this daily fair value gap right there, which we are stinging into. And whilst we are stinging into that, arguably just as important, we are potentially sweeping that high. How do we know that we are potentially sweeping that high? Whilst coming above this high right here, the swing high, we are not creating a daily fair value gap right there. And whilst we are above it, we are creating a wick right there. Do you remember candle science? Candle science states that a wick is actually fair value gaps on the lower time frame. So what happens right there with that wick on the lower time frame? Well, we possibly see something like this. Fair value gap going higher and a fair value gap going lower right there. Showing that manipulation that we actually want to continue lower, where the previous week low that we had right there could be the target. So off of that daily fair value gap right there, we could deliver lower towards that previous week low right here. Why is this important? Because this creates a context area. A context area creates an overall area where you have the highest probability of time frames below the daily right here for order blocks to actually hold. So for lower time frame order blocks to hold. A big mistake that I see oftentimes is that people, without any context, without any bias, go into the lower time frame, find any random order block and expect it to hold. Does not work that way. If you can understand where the higher time frame will most likely, what's the highest probability for the higher time frame to move towards next, then those order blocks will perfectly fine hold until we hit that drawn liquidity. So this line is the drawn liquidity. Now, if we go into the 4-hour right there, we need to know and understand what is an order block. Order blocks are not just simple up candles or down candles. Not every up candle or down candle is an order block. There are certain rules to make that order block really high probability. Where the first thing is, we want it to come off of a previous support or resistance level. In other words, our order block should be formed off of a previous PD array. Oftentimes, you will see order blocks will be formed off of previous fair value gaps or off of previous order blocks. That is exactly what we want to see. So, for example, whilst we continue lower right here and we create this fair value gap right there, we see that we create an up candle right there whilst coming back into that bearish fair value gap. That is exactly the first step. A premium array right there where we can continue lower from. Whilst coming back into that premium array, we create an up candle. Could also be consecutive up candles. After we leave that fair value gap again and we continue lower, we create a new fair value gap in the same lag as the order block. What does that mean? A lag, a bearish lag in this case, is from a swing high towards a swing low. The swing low in this case is not super relevant because if there's no swing low, does not matter. As long as there's a swing high, that indicates that there's some kind of lag, a bearish lag. The same when we talk about a bullish lag, if we have a swing low and we do not have a swing high yet, perfectly fine. As long as we have a swing low, so for example, this right here, from that swing low, that right there is a bullish lag. In that lag, so in this bearish lag right here continuing lower, we want to see a fair value gap being created after we have up candle or up candles, so consecutive up candles. Then once we have the support level that we can continue lower off, we have an up candle going into that, and we have that fair value gap continuing lower right there in the same lag as that order block, perfect. We now have an order block. The only thing left for us to do is to now mark it correctly. So how do we mark an order block correctly or any PD array in general? Well, if we talk about an order block, and the same goes for mitigation block, break block as well, then we want to mark it based on the fair value gaps. Meaning, if a fair value gap is exactly overlapping with the low of the order block right there, in other words, the wick right there, then we want to mark out the wick right there. If the fair value gap, so there's no fair value gap overlapping with the exact wick low right there of the order block, then we mark out the body. So to give you an example, if we were to look at this order block right here, then we were to mark out, if we were to look at this order block right here, then we were to mark out the body instead, because the wick right here is not overlapping with any fair value gap. The body does not have to be overlapping with a fair value gap. Same goes for this order block right here, where the fair value gap is actually created quite late. The fair value gap is sitting right there. So this right here is the order block because the wick is not overlapping with a fair value gap. Can you see that the top of the wick is actually not overlapping with any fair value gap? So we use the body instead. Now, why actually is that? That is because if we move very fast and we have a wick overlapping with the exact fair value gap, then this right here is the sensitive area of the order block. If we do not have that wick overlapping with a fair value gap like we saw in the earlier examples, then that means right there that the body is the sensitive area because the wick right here actually already got traded back into with, for example, like we see, that down candle. So since there's no intention anymore, the sensitive part changes towards the body right there. So we understand bias. We have a good understanding of what an order block is in alignment with that bias as well. So the third step is the relativity theory. And the relativity theory is essentially whenever we look at different time frames, price action is always going to be different. So we need to make sure that we have everything in context. And I mean in context of the higher time frame. The higher time frame rules, as in the higher time frame is the strongest time frame. So if we look at the top left, we have the monthly, the weekly, daily, 4 hour, 1 hour, 50 minute, 5 minute, and 1 minute. If I were to start off looking at order blocks on the 15-minute time frame, I would not look at strong order blocks unless they are in context of the 1 hour and the 4 hour and the daily and the weekly and the monthly. So here we started off with the weekly time frame right there, understanding that the weekly can continue lower. We also then went into the daily. We then went into the 4 hour. I do not go into the 15-minute right here to look at a 15-minute order block that is, for example, sitting right there. This 15-minute order block is extremely low probability. Why? Because it's not in context of the time frames above it. There is a 4-hour order block just above this 15-minute order block. So the order block on the higher time frame, on the time frame above the 15 minutes, will be the stronger order block. It will have the stronger magnet and will have the stronger rocket as well. So if we want to create a retracement like we see right here, then most likely it will not just be a retracement into this 15-minute order block. No, it will actually be a retracement into the 4-hour order block that we see right there, especially after we create the fair value gap. This is very important to understand so you don't get lost on the lower time frame. So just like we have done, start on the higher time frame, then slowly work your way down. And if there's already a 4-hour order block, then we don't need to go into the 1 hour unless we sting into that 4-hour order block right there. And we can now confirm the 4-hour order block on the lower time frame. Again, the first 3 steps I have gone over before. I think a lot of people would argue I'm already familiar with that. The 4th step right here is the retracement. Can you see what this order block right here has in common with, for example, this order block and purely looking at the way we retrace back into those order blocks? So this order block right there is created off of this previous order block right there as well. But this bullish order block right here does not hold. And the bearish order block does hold and reaches actually the drawn liquidity quite fast right there. Why does that happen? That, of course, has to do with the overall drawn liquidity, understanding that bias on what we're doing as well. But a huge part of it is as well the retracement, similar to what we see right here with this order block. This order block right there is created off of this previous order block right there and the previous fair value gap that we see. And this order block right there has something in common as to why it fails with this order block that also failed. And that again all has to do with the retracement, which is where we also now need to understand a fair value gap. Again, those fair value gaps Why are they so important? Why do I almost in every video, I would argue, go over fair value gaps? They tell you everything. They tell you the intention of price. If there's a fair value gap in the market, it literally tells you what it potentially wants to do. It's, for me, extremely important to pay attention to fair value gaps. So why do I mention that? A fair value gap, again, to quickly go over it, is a 3-candle pattern. We have the first candle, can do whatever it wants. Second candle is always an expansion phase candle. What is an expansion phase candle? Well, it's when the body of the second candle actually, in a bearish scenario, closes below the first candle low. That creates an expansion phase candle. The expansion phase candle has the potential to create a fair value gap. Depending on what the third candle does, if the third candle stings back into the first candle low, then it does not create a fair value gap, and the potential fair value gap is now not created. If the third candle stays below the first candle low, there's a fair value gap. Now, why is this so important? Why do I emphasize so much on those basics? Because they tell you everything. It's all in the basics. The secrets are in the basics. Because here, whilst coming back into this order block right there, what do we see? We create an expansion phase sitting right there. So when we create that expansion phase, we have a lot of momentum going against us in that order block. Again, I like to use an analogy of those pushing hands. Bearish hands push price lower, bullish hands try to push price higher. If we have bullish prices, but there's a lot of bearish hands right there that push price lower, which is seen through fair value gaps, the intention again of price action, then the retracement into that bullish PD ray, if it does want to hold in the first place, will be a deeper retracement. So here, that expansion phase candle tells us that's a bit suspicious. Is that going to create a fair value gap? That's the next step. Because now we need to create a plan. And the plan is the following. When we create an order block and we want to know if that order block is truly going to hold, so we are now looking to confirm that order block, then we have gone over the first 3 steps. So we know what that order block is. Now we're looking to see, is that order block actually going to hold or not? Well, right here, when we create an expansion phase candle back going into the order block, what we want to see and what we want to wait for is for the fair value gap, the potential fair value gap, not to be created. So what does that mean again? Well, when is this fair value gap, this potential fair value gap right here, not created? When we trade back into the first candle low. So this candle low right there, if we trade back into that on the next candle right here with a wick, then we do not create a fair value gap going lower. Meaning the intention to going lower is actually taken away. So we only have bullish intention because the last fair value gap that was created was off of that order block right there. So we can confidently say that the probabilities are that we do still want to continue higher. If that is not the case and we do not close in that potential fair value gap, which I'll show you examples of in a little bit, then we get something like this, where we do create a fair value gap sitting right there. When we have a fair value gap going against us into an order block, that's not a good sign. That is extremely bearish right there, and that is not a good sign if we still want to continue higher. Because now, what have we added to our overall to-do list, we could argue? Well, our to-do list has expanded because now we have this fair value gap that we need to overcome first, which is resistance, essentially, if we want to continue higher. Because if we now want to reach these highs, for example, then we have a premium array that will try to stop us from actually reaching that high. Where if we did not have that fair value gap, we had nothing stopping us from reaching that high. So we could have done it a lot faster. So here, if we still want to continue higher, we want to see this fair value gap getting disrespected first. Meaning that we would love to see a new fair value gap right there, disrespecting that old fair value gap, confirming that we still want to actually continue higher. So once we sting into it and we actually continue lower, we are not all of a sudden surprised. No, we already saw that coming actually. Now, before we go over this order block, let's see this order block right here as well. When we create this order block off of this previous fair value gap right there, and we continue higher, when we trade back into that order block, what do we see? We have a potential expansion phase candle right here as well created. So there could be a fair value gap right here that stings back into that order block. So what do we want to do? We want to confirm this. Again, the plan of action is we want to take away the fair value gap going against us. That can either be done by, again, trading back into the first candle low right there. And when we trade back into that, we can simply confirm it like normal, like nothing happened, and we can potentially still look to continue higher. If that does not happen and we do create that fair value gap, we want to see that fair value gap getting disrespected first. So here, since we now trade back into that first candle low, we can simply confirm our entry off of that 4-hour order block right there like normal. And we can still look for potential higher prices as well. Now, once we create this order block coming off the previous order block, and we create this fair value gap right there, which confirms this order block. Now, if we want to trade back into that order block, what do we see again? We see right here that we have an expansion phase candle created. So when we have that expansion phase candle, there's a potential fair value gap. So once we see that, we already know, hey, that's suspicious. I would not want to see that. So if we still want to continue higher off of this order block right here, then ideally we want to take away the fair value gap. Meaning we want to trade back into the first candle low whilst we are creating the third candle. Or once the fair value gap is created, we want to disrespect that fair value gap right there, which both does not happen. We actually respect the bearish fair value gap right there. And that's exactly what we again continue lower off of. So this order block, we already know, okay, I don't want to go into the lower time frame, don't want to look at anything because that is low probability. Then this order block, the bearish order block, is actually really high probability. That's exactly where we want to look for our entry confirmation. Now, the same order blocks can also help you in understanding that bias. For example, on the weekly, daily, if I can't really get to a clear bias, these order blocks right here on the 4-hour will tell me where price might actually want to head towards next. Let's look at this example right here. We have this order block right there, which is created off of fair value gaps and as well this swing low. So the sweeping of that swing low right there. And that order block gets traded back into with what do we see? We see again this expansion phase candle. At this moment in time, we do not want to go into the lower time frame to confirm this order block to potentially continue higher. No, if we want to go into the lower time frame, we either want to see on the next candle trade back into the first candle low to take away the fair value gap. Or once it's created, we want to see a disrespect of that fair value gap, which both we do not see. And notice as well, when we trade off of that order block and we try to push higher right here, we have this expansion phase candle. So one could argue, well, it's time to rush in, time to go into the lower time frame. But there's nothing confirmed just yet because it's the same premise. If we take away this fair value gap right here to the bottom, hey, that's interesting for lower prices. And now what have we done? We traded back into the fair value gap, the bearish fair value gap that we have sitting right there. And with the up candles and a new fair value gap going lower, we have created a new order block sitting right there. And that order block is what we can now continue lower off of. On the daily, we know there's no order block above that 4-hour order block. So we can safely look for that trade opportunity right there as well. So all the steps are ticked off until we have the retracement. Now, let's look at the retracement. What do we see? We could argue that we create a potential expansion phase right here going into that order block. So what can we wait for? Well, we can simply wait for this candle to get traded back into right there. First candle high, take away the fair value gap, and then continue lower off of that. Then go into the lower time frame to confirm it. After that, we continue lower and we continue lower right here. And we see that those order blocks told us a story as well. They told us a story of that bias. It's again our job to simply understand the story. This is arguably the most important understanding when it comes to order blocks. It is not necessarily, all right, what are we coming off of? Yes, of course, it's important, like we mentioned in the steps, but it's the retracement that makes it. That tells us how much confirmation we need. And that retracement is seen through those expansion phase candles. When we take those away and we take the potential fair value gaps away, that is high probability. All right, perfect. Thank you.